G'day folks, Jim here from FX Charts, Tuesday the 11th of March. Thanks for tuning in. Well, it was pretty much a risk-off session today, particularly in Asia after the soft Chinese weekend data. That pushed the Shanghai Index down, and equities were a little bit lower all around. Currency markets were generally reasonably stable. Actually, they didn't move around too much, with the exception of cable that headed a bit lower, and the Aussies were also pretty soft. Iron ore prices are at 18-month lows, and the outlook for the Aussies are a little bit heavy. But elsewhere it was pretty steady. Today we've got the BOJ meeting, which might provide some action in Asia, although there are no real changes expected there. And there's some minor data out later on in the day. We'll go and have a look at the charts. And the euro, as you can see, is pretty much tracked sideways within a 40-point range, just below 139. Now it's in the middle of the range at the moment, and I think the hourlies are still looking a little bit soft, but going nowhere. The price action is going nowhere fast. The 4 hourlies, though, they're also topping out, and I'd be a little bit surprised to see us take out 139. I don't think we're going above last week's 139.15 high. If anything, it looks to me as though we could drift a little bit lower during the day. But there's decent support down around 138, 15, 20, 30 even, which was the breakout level here. But so 138, 20, 30 should probably hold it on the day. If we get below there, then we might head back down below 138. But I don't really think the damage is going to be too much today. There's not an awful lot of data out to push it around, so it might be a bit of a choppy sideways range. And I think overall, I'd use sort of 138.20 to 139, the figure, as a guide on the day. Further out, the dailies are pointing higher, so dips possibly are buying opportunities. If we do sit below 138, I think as long as 137.5 holds up, then the euro probably is a buy for the next couple of days. Having said that, if the Russian deal blows up in the Ukraine, then it's all bets off, and the euro will head pretty sharply lower. But at this point in time, that doesn't really look like happening. Moving forward to dollar yen. Well, having gapped lower in New Zealand, it gapped down to 102.60 yesterday, so somewhere down around here. By the time the retail platforms opened, though, it was back up at the figure, and it has just jumped around really since then. Right now, it looks as though the dollar's finding a slightly better bid tone today, but we're way well below the 103.40 session high, and it wouldn't surprise me to see another day trading between 102.80 and 103.50. That's as long as the BOJ don't do anything. We've got the end of financial year coming up on the 31st of March, so I think things will probably retain the status quo, and it looks like April before we see any further quantitative easing from the BOJ. So that really looks like it for today. If they do that signal an easing, which will surprise the market, then the dollar will head back up here towards its 103.80 level, and possibly on towards 104. I don't really see that happening today. The 4-hour charts are pointing a little bit lower, but as long as this rising trend support or thereabouts holds, I don't think we're going to expect too much damage. On 102.80, I think should probably hold it on the downside today. Cable was where the real action took place today, and it broke this rising trend support that's held it for the last few days, went down through the 100 and 200-hour moving averages, fell quite sharply down to about 166.20. Now this comes ahead of today's Bank of England inflation report, and it could be that the central bank are lining the market up for a rate rise later this year to prevent an asset bubble. They've got one eye on housing prices over there, which are going through the roof, particularly in the southeast of England. So we saw 166.20. We've got support down here at 166.05. I think that'll probably hold it for the time being, depending on what the Bank of England have to say. And on the top side, at the moment, 167 or thereabouts, which is where the 100 and 200-hour moving average is like. They look like to cap it to me. Having said that, the 4-hour charts are pointing lower. So if we do go below 166.05, which is the FIBO support here, the previous low was down here at 165.85. and then below that we're sort of heading back down towards the 160. Sorry, that's 165.85. Well, the 165.40 pivot, we could head down there. The 4-hour charts are suggesting that could be the way of it, but for the time being, I don't think we really should expect too much from cable ahead of the Bank of England. The dailies, they also look as though they might be rolling slightly lower. So it's going to be an interesting session, I think, for cable. Could be fairly choppy, so I think I'd be playing it from a fairly tight range. But right now, 166 to 167 looks to cover it. Dollar Swiss, which looks to be on the edge of a precipice to me. As long as this low here is 87.55. Now, as long as that holds, we're currently at 87 3/4. As long as that holds, the dollar is all right, I think. And indeed, the 4-hour charts are actually looking mildly positive for a squeeze back up towards 88 cents, maybe 88.15 or so. But if 87.55 gives way, we've got this minor channel here, which that gives us a base down around sort of 87.20. But if that goes, there's not much down here until 86.40. So we need to be a little bit careful with the dollar. As I said before, with the dollar index, it has broken major support, and it looks as though it's heading lower on the weekly. So maybe dollar Swiss is what's going to drive it. But as long as 87.5 holds, we might see a squeeze back up towards 88 figure, 88.20. Going out to the dailies, as you can see, we've got the channel here, so that's kind of guiding us, I think, at the moment. The dailies certainly don't look very healthy, and so I think eventually we could come back down here to below sort of 80. Where I say this, about 86.40. The Aussie, that looks pretty heavy. Chinese stock market, the data didn't do any favours at all yesterday. We did get a squeeze up to fill in the weekend opening gap, but it's been pretty heavy ever since. It has held 90 the figure so far, currently at 90.20. The hourly charts look as though we may be trying to form a bit of a base here, but the 4 hourlies are still looking pretty negative. We've got NAB Business Conditions and Confidence coming out later on this morning. That could give it some direction one way or another. But ultimately, I think the Nikkei and the Shanghai indices will be fairly closely watched. And if we do take out 90 cents, going back here to the hourlies, if we do take out 90 cents, then we may be headed back down here towards this the 200-hour moving average 89.85, and below here we're sort of heading down towards 89.5. I doubt we're going down below there today, but certainly a test of sub 90 could be on the cards. A lot will depend on the NAB numbers, and if they do come out better than expected, we can expect a run back up to sort of 90.40, possibly up to this 90.60 level. Don't really think we're going above 90 3/4 today, and certainly don't think we're like to see the Friday top at 91.33 anytime soon. So all up, I think probably sell rallies up to about 90.50, probably looking for a test down around 89.85, possibly down as low as 89.5. The Kiwi is doing precious little. It's at around its weekend opening levels. The market's really waiting on the RBNZ. Now the chances are there's about 98% chance written in that they will hike on Thursday. So the market though I think is long. So it wouldn't surprise me to see the Kiwi test the top side and then come off. If they don't hike, the Kiwi's there'll be no upside at all, and the Kiwi will be back down below 84, somewhere down here around 83.40, I think. That looks less likely at the moment. Between now and Thursday, it possibly, I think we'd probably just trade an 84 to 85 cent range. As I say, I think the market's getting itself long, so the upside ahead of Thursday, I think, is possibly a little bit limited, and I don't think we're going above 85. But equally on the day, the session low at around 84.40 is going to provide support, and below there at 84, I don't think we're going below there. The 200-hour moving average is there, and that should provide some decent bids. As far as data goes today, the BOJ will be the highlight, although nothing's expected from there. Elsewhere, we've got the German current account and US wholesale inventories. And of course, we've also got the NAB Business Confidence and Conditions. So that'll be about it, but I think it'll be largely a day of watching the equity markets and seeing where they're headed. So it looks like it could be a fairly volatile session, probably pretty choppy and nothing too directional, except for the Aussie does look a little bit heavy to me, and that could see some further downside. But that's about it for today. So have a very good day's trade, and we'll talk to you tomorrow. Cheers.